It's been a tough year across the board in many sectors, and the insurance industry has been greatly affected by practically all of them. So the big question everybody's asking is, when is it going to get better? Will 2024 be any different? In this video, I wanted to provide a little more context for what's happening industry-wide, why rates are increasing, and why coverage is changing, and what you can do about it. So first off, deductibles. A noteworthy development is the shift towards percentage-based deductibles, particularly for wind and hail coverage. The majority of our carriers at our agency have not adapted this strategy at this time, except for unique circumstances. But I do anticipate that more and more insurance companies are going to start doing this in the future. Instead of a fixed amount, the deductible would be a percentage of your home's insured value. For example, with a 1% deductible, an individual owning a $300,000 home would be responsible for a $3,000 deductible on applicable claims. This approach is gaining traction, and we anticipate broader adoption in the industry. Next up is loyalty. Sticking to one company matters. A new wave of surcharges is emerging for policy hopping behavior. It's becoming increasingly prudent to maintain a stable relationship with your insurance provider to avoid these additional costs. Next would be escalating claim costs. The past few months have seen no relief in claim costs. In fact, the situation has worsened. The repercussions are industry-wide premium hikes, not as a penalty for your personal claims history, but as a necessary adjustment to keep insurance entities solvent. The market strain is also intensifying. The insurance sector, particularly concerning auto and homeowners policies, is experiencing heavy strain. Major providers are tightening their underwriting criteria, with some even halting the issuance of new policies. Interestingly, there are signals of companies preparing to re-enter the market, and some already have, albeit with more stringent conditions, elevated deductibles, revised coverage options, and increased premiums. Rebuilding houses are getting pricier too. The inflationary environment continues to inflate construction costs, with material shortages and labor costs adding fuel to the fire. Insurance companies are grappling with these escalated costs, necessitating further rate adjustments. We've started to see some relief in this area, though a significant incident, like an ice storm, sub-zero temperatures, or so forth, could quickly change this. I'm not ready to say we're out of the woods here, but we're seeing improvement. Fixing cars is costing more too. Technological advancements in vehicles, while enhancing safety, have significantly driven up repair costs. Simple repairs now come with a hefty price tag, a reality reflected in your premiums. A simple example would be a regular windshield might cost $400 to replace, while a smart windshield could cost upwards of $2,500 or more. Medical and legal costs are still high. There's no abatement in sight for soaring medical expenses related to auto accidents or legal costs born from settlement disputes. These factors continue to bleed into insurance pricing structures. There's also more accidents. Post-pandemic lifestyle changes have unfortunately not reduced accident rates, as well as the severity, with a disturbing trend in auto fatalities. This grim reality is exerting upward pressure on insurance premiums. Big insurance support is still struggling too. The backbone of the insurance industry, reinsurance, which is the insurance a carrier buys to help cushion against catastrophic events, is buckling under the strain, with capacity reaching critical levels. Expect this strain to influence pricing strategies into the foreseeable future. So, what can we do about it? How can we tackle this together? As dedicated agents, we're committed to identifying viable strategies to mitigate these market pressures. For instance, pick higher deductibles. Consider this time-tested method for premium reduction, balancing potential out-of-pocket costs against annual premium savings. Being a safe driver. Engage in safe driving programs offered by insurers, potentially unlocking significant discounts like telematics. Check for discounts. Ensure you're capitalizing on all available discount avenues. Your agent should be there to help you audit your policies and stay ahead of the opportunities that you might have. Stay with one company. Given the new surcharges, frequent carrier switches could be financially detrimental. We advise a more strategic approach to carrier selection and loyalty to avoid those additional costs. Think real hard about submitting a small claim. Evaluate the financial implications before filing a claim, especially minor ones. Consider absorbing smaller losses to avoid premium spikes. Follow the rules. Adherence to traffic laws is more critical than ever. Tickets can significantly impact your premium for years now. So, if you know someone struggling with their insurance situation, we're ready to extend our support to them. We know that it's not pretty right now, and we know that the markets are a mess, but we're here to help, and we're happy to assist you in paving a path forward. We're here to weather the storm together and emerge strong.